Yeah, I think many are still in the lunch break. However, let's kick it off. My name is Amadeus Gryger. I'm a consultant. I have the pleasure to moderate this panel today. I work for WEPEX. We are a Frankfurt-based consulting firm focused on financial markets, and we also have a focus on digital assets or consulting in blockchain and digital assets. And just to give you a little bit of background about this panel about merging digital money and tokenized securities, in Europe, many jurisdictions allowed for tokenized securities, Germany, France, Switzerland, Luxembourg in the EU itself. And we all know that tokenized securities in theory come with a wide range of benefits. However, we observed that mostly only the asset leg is tokenized, while the cash leg, which you need to settle securities transaction, is mostly settled off-chain through pre-funded accounts, bank transfer, or whatever. And according to a market survey WEPEX conducted last year, a missing digital euro is one of the inhibiting factors that stops market adoption of tokenized securities. So we need a digital euro for market adoption of tokenized securities. And this digital euro, which is some buzzword, can come in many different forms, can be either central bank money, commercial bank money, a stable coin, or whatsoever. And the goal of this panel here now is to bring experts from the industry together that work in dedicated projects with digital euro forms, and we want to discuss the status quo of the market. We want to discuss pros and cons of different digital euro types. We want to discuss challenges, and then in the end, I would like everyone to give a quick statement on the short-term and long-term solution for merging tokenized securities and digital money. But before we start, I would like you guys to quickly introduce yourself, and Thilo, if you would start, please.
Okay, we'll start. Thank you very much. Amadeus, thanks to all of you who've come today after lunch and are enjoying this show, hopefully. My name is Thilo Derenbach. I work for the German Stock Exchange. I'm active in the post-trade space, the so-called Clearstream area. I'm responsible for the business strategy, the business development, and the market readiness for our clients that are active in the issuance space, both for the traditional world as well as the digital as well and the tokenization space.
Simon, I'm head of digital assets at Hauck, Aufhäuser, Lampe. Used to be in the same role before at Deutsche Börse, so former colleague and in collaboration with both of you. Before that, did the first blockchain transactions at Commerzbank, so former colleague here. So nice to be in kind of a family here.
Hi, I'm Lucas Bruggeman. I'm the Chief Digital Asset Officer of Börse Stuttgart Group, but also I combine the, say, traditional world, being the CEO of the Börse Stock Exchange in Switzerland, also a daughter company of the Börse Stuttgart Group, and we recently started to build a secondary marketplace under the DLT license in Switzerland to provide liquidity in tokenized securities.
Hello everybody, my name is Roberto Pagliari. I work at Commerzbank in the DLT lab. I lead a team that specializes in what we call DLT-based cash and markets. So we cover DLT-based cash, so mainly on the wholesale side, but also on the corporate side. We'll get into that, I'm sure, shortly. On the cap markets world, we look at securities, bonds. We do client advisory. We do internal advisory to our business units. That's generally it for me. We do also market research, and we incubate early implementations, let's say. So we are incubating finality, which is probably something we'll talk about later as well.
Okay, great. Thank you, guys. Let's kick it off with a light question. Simon, you have conducted many panels discussing this topic from your perspective. Why is the topic important, and where does the market stand currently?
So to be honest, the topic itself is not really news. As you said, we've discussing it for years, but still us sitting here is, I think, the evidence that it hasn't been solved yet and that we still have to solve it. Why is it important? Because it's a kind of a chicken egg problem. So tokenized securities try to sell many efficiencies, but the truth is that these efficiencies are to most extent not possible without the cash side. Because security settlement per se involves for most of the time also cash. And so if you want to achieve settlement efficiency and don't have the cash on the blockchain as well, then you don't leverage the efficiencies. So it's actually a very simple problem, as it seems. But as it is not solved yet, I think it might be more complicated than thought. So happy to discuss it here, maybe if we can come closer to a solution than today.
Yeah, I think one step towards a solution is the ECB trials and experiments for settlement of new technologies for settlement in central bank money. And Thilo, you decided, or Deutsche Börse with its 3 CSDs and Eurex Clearing decided to join or participate in these ECB trials. Can you explain why you decided to do so and what benefits you expect from it?
Yeah, I think it goes to Simon's point, right? We have a problem that hasn't found its solution yet. We have a cash leg that is not currently where the securities leg is. And for us as a market infrastructure, we talk wholesale banking, of course, a wholesale CBDC, so digital central bank money is of course ideal for usage of transactions, for DVP transactions on chain also, both in our world, but also outside of our CSD infrastructure. So from our perspective, we are with the participation to the trials and experiments, we're supporting the efforts of the industry, of the central bank, so the ECB as well as Bundesbank, Banca d'Italia, Banque de France and others, to progress trial, experiment, experience digital cash, in this case wholesale CBDC, on chain, to progress the market and advance it into that digital or tokenized space. And that is also the prime expectation from our perspective. We don't believe that we're going to find the solution resulting from these trials, but it's important to participate, give market participants the chance to experience digital cash, wholesale CBDC, and also, as I said, just define a path forward, including a central bank money solution on chain next to the commercial bank money that has already been mentioned.
Thank you. Roberto, Commerzbank did decide not to join the ECB trials as far as I know. However, you are part of Finality and you will be a co-issuer of the commercial bank money token together with other banks. Can you explain why you did this and what benefits commercial bank money token, for example, has, and if it's really an alternative to settlement in central bank money?
So, yeah, so the first topic is finality. So finality is sometimes referred to as a synthetic CBDC, and we were early investors in finality. What it does is it leverages in Europe it would be, when it goes to Euro, or when they adopt Euro, it would be the ASI6 technical accounts at the ECB. So that was the ancillary payment system accounts. And at the moment, they've gone live with Sterling, which takes, and the equivalent there is they use a omnibus account at the Bank of England, so they were one of the first. The idea is the consortium of banks would fund the account, and then that money is made available on Finality's DLT, and then they could be exchanged with so the money is effectively has very close to central bank risk characteristics, so that's why they call it a pseudo CBDC. So that's very interesting because then you get, once they adopt additional currencies beyond sterling, you get cross-currency interoperability kind of out of the box at a relatively early stage, and you are able to move money 24/7, 365. On the commercial bank money token, that is tokenized deposits of our corporate customers. That's making available commercial bank deposits in a different technical form on an industry DLT. And that enables corporate customers to conduct payments potentially more efficiently. We can adopt new kinds of payment styles, so we can do conditional payments, embed that money in smart contracts. So it's not an equivalent to a CBDC because with CBMT, the key part is that it's multi-bank, so it's a multi-bank token. The platform orchestrates the exchange and conversion of those tokens to avoid a transfer of commercial bank risk between the banks. But at the end of the day, it's net settled with via RTGS. In the future, you net settle or gross settle with, of course, with the CBDC. So at the moment, it's the second tier, let's say.
Okay, thank you. Before I would like to ask Lucas on the Swiss perspective of things, I would like to ask Simon. We have now covered briefly the ECB trials and tokenized commercial bank money. There's still a third faction, stablecoins, maybe e-money tokens under MiCA. And I think 2 years ago you mentioned decision makers in banks are not bullish enough.
This has changed.
Please explain how it changed.
I mean, there are obviously now initiatives going on where large banks or large asset managers have started initiatives here. So we see that the traditional world is moving into a way of issuing money on-chain. And that's, for me, the important point. To be honest, for example, we also consciously decided not to participate in the ECB trials. I don't see any value in them, to be honest. I think a central bank has no incentive to manage money decentralized. It's not a decentral bank, per definition. So what they do is basically they provide a digital payment mechanism, which is nothing bad, to be completely clear here. A digital payment mechanism is a very good thing, but it's not our business. And I cannot guarantee, especially not in the public environment, an on-chain settlement if I'm depending on a payment in a system somewhere else that can be changed. So I break the immutability of the public chain if I depend the settlement of the security on a payment that can be changed by a central party. And this is simply something where we currently don't see really a value for making on-chain settlement in a reliable manner. And for that reason, I think we need money on-chain, because then we have the full transparency on-chain. And I think we need that for immutable transactions.
Can I just add something to support that? I mean, we talk about money in the different qualities, and it's really important to emphasize these three money quality, or sorry, not money qualities, but types of digital cash, because there will be very, very different use cases. You've explained a few. I've emphasized one from a central bank money perspective in the wholesale banking space. I would really distill or cut the topic into three. One being more the cryptocurrency topic, which can be very relevant and super interesting as an investment vehicle, as a means of use for a retail investor or other. We have the stablecoins that we've just touched on, who are extremely important and basically represent commercial bank money, if you like, if we talk in traditional terms. And then we have the central bank money equivalent, which would be the wholesale CBDC. And all have their legitimate use cases. And it's important just to emphasize that it's not one or the other. And you didn't say that, right? It's not one or the other, but as we have commercial bank money today, central bank money today, retail cash, wholesale cash processes, the same is required on-chain. And that's what we're trying to do with the wholesale CBDC or the ECB trials, as well as with the initiatives that are out there, which are really, really good when it comes to tokenized cash in stablecoin form, that have specific characteristics, that have financial dynamics as well. But that's something that we, for example, then would not be in the game, but something that you would be supporting more from a development perspective.
Okay, great. In the voice, it's perfectly fine. Lucas, from your perspective, Thilo and Simon just mentioned there are dedicated use cases for the different types of tokenized cash, if you want to say it like this. Can you explain a little bit further which use cases do you see, maybe also from a Swiss perspective?
Yeah, no, I think we are a little bit more positioned somewhere in the middle. In Switzerland, we see already since about 3 years the FINMA has, well, there's a DLT license, and we are the first exchange that basically applied for this DLT license, where you can basically trade and settle without CSD. And we looked at the use cases from the beginning onwards, and in Switzerland there are over like 100 companies already tokenized. So on platforms like Daura, Actionariat, they are the pioneers on that field, and some of these companies already have a market cap between 50 to 100 million. Now, what they need is a secondary marketplace with liquidity. So we are building this place, and they can bring their tokens, their securities, on our exchange. We have our in-house market maker with WEPEX and others, and now we have to solve for the cash lag. What we did is we are a member of the CMTA, the Capital Markets Technology Association, where all the banks and all the technology providers are together and looking for a uniform, standardized solution. And on the public blockchain, we're using the public blockchain in this case, and we're using a DVP token. So there's a delivery versus payment token, and it solves for both legs. Basically, it orchestrates the cash lag, and it orchestrates the token lag. And basically how it goes is that Bank A brings a token to the exchange, trades normally, regularly, off-chain, on the exchange, but settles on-chain. So the settlement is on-chain using Ethereum, and the cash lag is done directly via the SIC. So we are, as an exchange, connected to the SIC payment system of the SNB. So we can execute the Swiss franc fiat leg from our end at the same time as we orchestrate the token to be settled. And this in-between solution provides banks in Switzerland much more chance of hooking up to the exchange, executing the tokens, and basically, or really like executes it against Swiss franc fiat. So from our end, you know, that's a very good solution for the next, say, 1 to 3 years until there is maybe a different trigger solution, maybe CBDC or other types of digital money. But until then, I think this is an absolute great way of allowing traditional banks and brokers to hook up to a digital exchange, trade against Swiss francs, but use the power of settling without a CSD and therefore saving money. And in the end, it's also to be discussed which products are going to be coming onto this exchange. And I think in Switzerland with the tokenized companies, there's a good way of starting, because it will have to start somewhere.
You want to say something?
Yeah, no, well, we're talking about Switzerland, so they're very advanced in Switzerland. So we're part of the Helvetia 3 program. So that's the issuance of digital bonds on SDX and settlement in Swiss franc CBDC. So as part of that, as part of onboarding SDX, we trialed and tested that, and it works quite nicely. So we fund an account at the SMB, we get the tokens created at SDX, and then you can transact the bond with the CBDC, and it works pretty nicely. And then when there's no CBDC, then there's a tokenized Swiss franc made available by SDX. So it works nicely. The Swiss are very.
It's a bit different, but
it is slightly different, but yeah.
Because we are not a digital twin of something which already is existing, we really try to use the blockchain as it's meant to be, in my view. But that's my opinion.
Maybe quickly adding on that, because I think you mentioned a very important point, and this works for the incumbents. So if you're already part of the systems, if you have already access to the existing liquidity pools, this works perfectly well. Now we see, and I think we're on the same page, that also the merging of digital money and tokenized securities will also be an enabler for secondary market liquidity. Yeah? Then we have the issue that if some market participants have not access to these existing solutions, where there are triggers or bridges being built or whatsoever, they don't have the reliability to see what's happening in the other system, which makes them dependent again on an intermediary, and then we are back in the system as it used to be before, which leads to no structural change. And I think that is something what I would say is the biggest issue I see in these kind of solutions, because it brings back the old system, basically. And we can see that already now with the DLT pilot regime. Because if somebody applies for DLT pilot regime MTF license, and then is basically having maybe new market participants. For example, imagine there would be a retail client that onboards with a pilot regime MTF. He's not part of the existing payment rails. He cannot rely on information out of the systems because he doesn't have access. So he doesn't know if, for example, somebody who is buying it has the liquidity to buy it. So this is structurally a really big issue up front for secondary market trading. And the liquidity, if it's on-chain, it's visible. You can check if somebody has the liquidity to buy a product that's traded on a blockchain.
And if we expand on on the sort of challenges that were just outlined, we also have to emphasize that in German we would say, or the translation would be, we need to leave the church in the village, right? Wir müssen die Kirche im Dorf lassen, because we're talking about the cash and the money qualities and the necessity, absolute necessity of cash on chain to support DVP or PVP transactions as well. But it's not the holy grail. We have another 9 minutes, and it was really important to me to make that point, right? It's one important factor, and many of you might have been visiting the panel that was in this room just before lunch, and they were emphasizing exactly, yes, I think Emma is here in the room, she was sitting on the panel from JP Morgan. It's about integration, it is about interoperability, it's about standards, because we can have tons of tokens on a chain and the money on that chain, and it doesn't change much, because it stays in that chain and it's isolated on that chain. So we need that interoperability to make all of this to make sense, to really allow for the scaling of the products on chain. And the cash element is important, but it requires a few things on top or as a complement to that to resolve the issues that we face today that Christoph also mentioned when he was sitting on the panel this morning, which is the volumes are not there yet. We have tokenizations happening. Yes, we need more of that, but we need that interoperability and standardization as well, or on top.
You wanted to add something, Lucas?
No, I was saying the same thing. It's all about standardization. That's why such an organization as the Capital Markets Technology Association is important to set standards. Without standards, you will not be able to get interoperability and nor liquidity. Liquidity doesn't, just come up, with a market maker. You need demand and supply. So you also need a lot of retail. That's why we are definitely focused also on making sure at the end the product is accessible and not some theoretical, exactly.
Yeah, talking about liquidity, I think the biggest euro stablecoin currently issued has a market capitalization of 217 million euro or something. So not a lot. Maybe Thilo and others, please jump in. Will cash tokens that are not issued by the ECB or another central bank ever provide enough liquidity to serve capital markets efficiently?
Yeah, okay. Never say never, and certainly I believe they have a legitimate place. I mentioned it earlier, right? It's really not about the one thing, which is wholesale CBDC, that's relevant for us in the wholesale banking space. Fine, as one money quality. There's a commercial bank money aspect, which has its legitimate place as well, which could be covered by other e-money tokens or stable coins provided by the industry with the financial mechanics attached that are appropriate for our banking system and our risk profiles. So the short answer would be, I entirely believe that they have a space and there will be the volumes. And you posted yesterday on LinkedIn, and I briefly responded to that. We will look back in a couple of years' time and we'll think, wow, look at what happened in the meantime. We will see the volumes. The 200 million are obviously a drop in the ocean today, but I think there's much, much more to come. And if we start in the wholesale banking space with a sort of risk profiles for e-money tokens, stable coins that are appropriate for us as an industry, we are entirely a buyer of the product, if you like, not physically, but technically, and totally support the sorts of initiatives that are out there to drive that.
Also, the adoption, I think, will also come from the crypto world. So people that already have access to crypto via, for example, an app like Bison, they are also, the next generation that's going to buy the tokenized securities on the same type of app. So I think it's all about how to address the market and not sticking to the dogmas and really find out what is the user case in the end to provide that solution, and not asking if it's only the right cash leg or not. We're not ready there because there are lots of new initiatives, etc. There's no final answer to that question.
Anybody else want to add something? Otherwise, I would like to jump to our last topic, interoperability. There's definitely a risk if we have different issuers of cash tokens that we have blockchain island solutions somewhere. The promise of cross-border payments with tokens could not be fulfilled. Simon, you as a very experienced guy, Commerzbank, HAL, largest crypto securities registrar. What do you see as measures to address the risk of non-interoperability?
let's cross the bridge when we get there. I want to see operability before interoperability. And I see little operability right now. So those who are claiming interoperability at large scale, please provide operability first. Then let's discuss about interoperability, because otherwise you have a risk of building dream castles that are simply not existent. And it's nice. I do not like discussing that. It's a nice hobby, but it's not my business. Yeah. So I think what we need is actually people doing stuff. I don't fall short saying that. And of course, interoperability is an issue. I don't want to make the issue smaller, but it's a bigger issue that we don't have more solutions operable. And this is what I would like to focus on. And to be honest, the biggest island, as you mentioned before, in terms of network, is still the private network, because it's never public. Yeah. So if we don't want to build islands, let's or make interoperability, let's not try to build more bigger islands. For that we will discuss bridges for already. But let's try to go to the land, yeah, to the continent, and try to go out there and stick out the corners, and let's figure out what it means to live on the land instead of everybody building his island where he feels comfortable.
I think if I may,
sure.
I think our reality for some time will be that we have to work with the environments that we have, which is private permissioned infrastructure. I think we all look towards and work towards a decentral and really public blockchain solution, for sure. I think my reality, but I think also yours, Simon, for the next 24, 36 months is private permission. So assuming that is the case for now, the islands will exist and they might get larger, but I would state interoperability is super important. We cannot wait until there are more solutions out there. There are actually lots. You mentioned SDX, SG4, Orion, your platform. There are numerous platforms out there that exist already.
And they're all on public.
Which is fine, but they remain, not all of them are public. Not all of them are public. And as we have these, and even in the public space, they are isolated in terms of asset tokens that can be moved around between them. That's not happening. Nowhere, in none of those.
We have a legal obligation to do that.
That's great. The reality is, everyone, it's not happening. So, assuming that is the case at the moment, interoperability is super important. The islands will remain, market players will persist, new entrants will enter the space, but they need to interoperate. We don't claim, also as an incumbent, that we will be the all-solving and ever-present sort of player in the market. We have to fight for our position as well. But we also understand that we need to create that interoperability as part of the survival, answer to the survival game that we have. So, long story to say, interoperability is super, super important. And perhaps some of you have seen that white paper that we've put out with DTCC and Euroclear at Cybos last year, that we're going to announce this June, the first phase of that interoperability play to proceed. I know you.
Thanks, Thilo. Sorry, I have to cut the time. Before we end, I would all of you please ask you to provide a short statement on a short-term and long-term. Please short-term. Roberto, would you please start?
Yeah, short term, I'm looking forward to seeing some more developments on the commercial bank money token world. We see also activity in regulated liability network, activity in Asia with Partior. So I think I'm hoping in the next 12, 24 months we should see some good stuff happening there. Longer term, yeah, we'll have hopefully finality operating multi-currency. But yeah, I think as the lubricant for the whole ecosystem is absolutely essential. We have cash, and that's our primary focus right now.
Short term to go live with an operatable exchange in Switzerland, say June, July, once we've received the license of the FINMA to go live with an actual exchange, build on the public blockchain, using our existing members and providing liquidity on the first different tokens, security tokens. And mid to longer term, we are, as Börse Stuttgart Group, participating in the trials because we do believe in them. And we want to be part of that, as well as we're going to make the whole exchange DLT ready, because our DNA is basically structured products and derivatives, and those are meant to be tokenized. And I really, truly believe that in 2 to 3 years, most of these underlyings will be tokenized, and we will have them trading on our exchange, and it will go much quicker than people think.
Sail the ships, take the wind of crypto spring, leave your island, and discover the free world of public chains.
Cash is part of the puzzle, of the solution. It's not the holy grail. Cash on chain is required as a contribution to advance the venture in the crypto space, for sure. Hence why we're participating in the trials. It's not the only thing, as I said. In the meantime, stablecoins will be necessary to bridge the gap, but also to find their own feet and use cases. So short term, there's lots of interoperability still building to be done. Long term, I would agree with everyone here on the panel. There will be many, many more instruments tokenized, available, and mobile across different ecosystems.
That was great, guys. Thank you very much. Learned a lot. And thanks also to the audience.
Thank you.